Hello everyone, tonight on Business Live, workers of Coca-Cola Ghana agitate over dismissal of some of their colleagues. They accuse management of not following due process. Institute for Energy Security is skeptical about government's ability to deliver on 100% electricity coverage. Plus, Securities and Exchange Commission asked to do more than issuing a warning on the operations of Chinese firm Chai Century Hengyu Group Limited to avoid a repeat of the Menzgo situation. Thanks for being with us. My name is Darryl Kwa. We've got details right after this break. Welcome back, everyone. Tonight, the Institute for Energy Security is asking government to consider revising its decision to put a freeze on discussions and issuance of licenses to new independent power producers, including renewables that are cheaper and more environmentally friendly. Here are extras of a statement issued by the Institute.
According to the IES, a revision of the decision is necessary because it has stalled many renewable power projects, some of which have secured all the technical permits from the relevant government and district agencies. The statement was in reaction to President Akufo-Addo's assertion that he will ensure 100% electricity coverage in the country by the end of his second term. Though the IES is pleased with government's renewed resolve to act on this mandate, it remains cautious in hope as recent history does not instill confidence. As a result, it entered the appropriate authorities to make the necessary investment and regulatory mechanisms to ensure a fulfillment of the promise. From 2010 to 2016, the country's electricity access recorded an annual growth of 2.7%, extending national electricity access to 83%. However, from 2016 to 2020, it has experienced the lowest growth in electricity.
Well, the author of that statement joins me to explain further. Great to have you on Business Live tonight, Fritz Moses. He is research analyst at the IES. So the Institute is skeptical about the President's universal electrification promise. Why?
All right. Thank you very much, Daniel. And first, we are skeptical, yes, but we also believe that it's a good step. It's a bold step that the President has taken or has made mention of. We think that it's in the right direction and something that we should, as a nation, be gearing towards. Of course, the NES, the National Education Scheme that was implemented in 1985, goes to that, speak to that effect, and so we think that yes, it's true. But then again, we analyze the data from previous years, from 2000 to 2019, 2020, and realize that although we have been doing well, especially from 2000 to 2016, we've achieved the lowest annual growth for electricity access from 2016 to 2019 of about 0.67%. And we think that this doesn't augur well for the industry, doesn't speak to the hopes that we want to instill in Ghanaians that there will definitely be that universal electrification by 2050. Yes, we think that government has done well by making this a priority, but then of course it has to look at what it hasn't been doing very well over the years, which of course is in relation to the renewable energy, because you realize that most of the areas, about 1.7 million households that do not have access to electricity, are in landlocked areas, they are in lakesides, they are in areas that are hard to reach for the national electrification project or the national grid to get to them. And so if you would want to extend electricity access to them, then the best option to go for those areas or is the renewable energy space. You look at solar, you look at wind and all that. And we think that the government should be interested in making the necessary investment in that sector for those for that 50% of the population that do not yet have access to electricity.
Right. So essentially, you're asking government to ramp up its renewable energy drive. You also make mention of the fact that government should revise its decision on licensing new IPPs.
So you realize that in the 2018 Integrated Power Supply Master Plan, the government put a freeze on the the issuance of licenses to IPPs, new IPPs and all that.
Right.
Although, of course, already some IPPs had access to their licenses and all that, but they were inhibited from operating. And we think that with the current guideline, it means that there will be definitely be a revision of that ambition, of course. Also, we think that government, in revising that, should look at more into instilling confidence in the investors to go into renewable energy, because for the many people that it seeks to reach currently, it's the renewable energy space that can be able to reach them effectively and more economically. So we think that, yes, it has to revise that. But then again, it also has to revise the regulatory framework that surrounds the energy sector. Of course, we must look at ensuring that commercial banks are interested in the field, in the sector, and of course, especially in investing in the renewable space. And we think that these are measures that the government, when taking, would go to boost its goal or its promise that it has given.
All right, thank you so much for joining us. Fritz Moses, research analyst with the Institute for Energy Security. While still on energy matters, Ghana is set to open Sub-Saharan Africa's first liquefied natural gas to power project as it moves to position itself as a hub for the cleaner and cheaper fuel in the region. This model has been successful from Asia to Latin America in recent years as they allow nations to switch from dirtier fossil fuels to keep the lights on. And for sellers, integrated LNG to power provides a guaranteed outlet for the fuel. So here's what we need to know about that. First off, as you pull up the infographics for you, Tema LNG Terminal Company received the floating regasification unit from Jiangnan, China on Wednesday. Now, this paves way for the supply of 1.7 million tons of natural gas per year for power generation sometime this quarter. And the $350 million project has been under construction for about 2 years, 2 years back by Helios Investment Partners and Africa Infrastructure Investment Managers. State-owned Ghana National Petroleum Corporation is currently the mandatory off-taker, which will receive regasified LNG to fuel plants in the thermal power and industrial enclave. All right, so what does this hold for Ghana's energy sector? Dr. Yusuf Suleimana is an energy strategist and an expert in global energy geopolitics.
This unit is simply just gasifying LPG or natural gas. That's what we normally call the LNG.
Okay.
You know, to make it at the state that can power plants readily. Now, over the years, where are we coming from? Over the years, Ghana has always been dependent on heavy fuel sources, you know, to generate power. Largely, a component of it is crude oil and RFO, that is residual fluid oil. Now, these sources, unfortunately, are imported into the country. It creates a lot of burden on the economy. It creates a lot of, you know, pressure on the city. Now, to the extent that we're going to have a structure that to be within our shores, that to be able to provide this quantum of gas, LNG, which is largely methane, let's say 90% methane, okay, you know, which is cleaner, fresher, and more purer at competitive rates, you know, to power our power industries. That would be great.
Interesting.
Now, you remember the history about IPP. Why do IPP came to light? IPP came because industries were ready for power, but there was virtually no supply of power. In fact, domestic consumption for power was not even available, and that's how come we had Doomso. Now, three things accounted for this. We need power availability, we need power affordability, and we need power dependability. If these three things are not met, we are not going to have sufficient supply of power that will be near to the benefit of the end user.
Now, government has reversed the shortfall in the recent Treasury Bill sale target by recording an 8.7% oversubscription in the latest auction. That's according to the Bank of Ghana's weekly sale. Charles Nixon Yabua has this update.
Importantly, government was able to mobilize enough money, in actual fact oversubscribing by 8%, and that's very important for the economy because in recent times, for the last 3 weeks, government has been failing to meet its target, but this time around it was able to do better in terms of the sale of the Treasury Bills. Clearly, when it comes to the 91-day Treasury Bills, the government was able to mobilize more than 950 million cedis at an interest rate of about 14.09%. With respect to the 182-day Treasury Bill, which apparently is a 6-month bill, it was able to mobilize a little above 122 million cedis at an interest rate of about 14.14%. So you could tell that in terms of the yield or interest or the pricing on the instrument, it's within range. It hasn't really increased by a larger extent. It had only gone up by 100 basis points, which is about 0.1%. So it's good news for the country because there is a level of investor confidence in the economy when you are able to achieve your target, even it's being oversubscribed by a certain margin. So it sends positive signals to the investing public. And government always have to go to the market to issue Treasury bill as part of mobilizing finance to finance the budget, as well as other capital projects which are very critical, i.e. hospitals, roads, and there's a need for government to float financial instruments to mobilize enough revenue to be able to finance some of these projects. So on a whole, we will say that the government did fairly well this time around. Perhaps investors are seeing the positive sentiment after the president was sworn in recently. There had been some level of improvement in the general business environment. So clearly going forward, we anticipate that government will be able to mobilize more of these short-term funds to be able to finance the budget. And it is very, very critical as far as we are concerned. We are hoping that interest rates on the instrument would go down, because when it does go down, it also have a rippling effect on cost of borrowing. And as businesses, as consumers who borrow from financial institutions, they want to see cost of credit or lending rates going down so that they'll be able to borrow with ease.
Well, still on investments, the Securities and Exchange Commission is warning the public to beware of Chinese firm Chai Century Hengyu Group Limited, which has been undertaking electronic investment transactions. According to the capital market regulator, it has not licensed the firm to carry out any capital market activity, including investing or trading for returns, as mandated by Section 3 of the Securities Industry Act. As such, Chai Century Hengyu Group Limited cannot operate as an investment firm. It is therefore advising investors to consult the Commission through its toll-free line or main telephone number to confirm the licensing status of any firm offering products or services relating to investments in the capital market. The Securities and Exchange Commission reassured all market operators, investors, and the general public that it is dedicated to ensuring rigorous implementation of all the rules or operations in the capital market in order to promote the orderly growth and development of an efficient, fair, and transparent securities market. Meantime, we have got response from Chai Century Hengyu Group to the warning from SEC. It says it is not an investment company and never an investment company, neither does it engage in securities activities, hence the need to obtain and have the Securities and Exchange Commission license. The group considers this publication by SEC as timely and necessary as it seeks to educate and further distinguish the Chai Mall business separate from businesses under the mandate of the Securities and Exchange Commission. The Chai Group management, by the statement you're seeing on your screen, is expecting its service centers and leaders, especially within Ghana, to embark on proper and rigorous sensitization and public education. This, when done, it says, will create the needed awareness of the Chai Century Hengyu Group Limited business model and nature. Well, Dr. Richmond Frimpong is Executive Director of Financial Literacy Foundation Africa. He told my colleague Charles Aite earlier on the marketplace that the Securities and Exchange Commission must do more than just issue a statement to avoid a repeat of the Men's Go situation.
This is not the first time we are having to have a banter between an institution that says it's not under SEC and SEC also going out to the market to issue to the investing public of just being cautious. Now, when we say securities are simply what we call fungible and tradable financial instruments that are used to raise capital either in the public or the private markets. Now, there are basically three types of securities we have. There is a debt, there is a equity, and there is a hybrid. But whatever it is, whenever there is an exchange, and when there is trading, and when there is a raising of funds, then SEC in that space is responsible for supervising that exercise as a regulatory body. Now, with hindsight from what happened with Men's Gold, my expectation is that even before this release, SEC by this time should be having a conversation and an engagement with anybody that even registers this organization in question, and possibly even go underground and even become potential clients of this kind of organization and verify for themselves if indeed the transaction that is going on falls under the Securities and Exchange Commission, rather than to just issue a circular and say that customers should just be aware. Remember, when all is said and done and customers do not even heed and challenges happen to this kind of business, ultimately it is a government that will take responsibility, and SEC may be found wanting to probably take a second look at their position. So my expectation was that it was not just going to be just a circular released, but it was going to be something more than just issuing a circular.
But don't you feel that there have been some background checks, there's been some engagement between both parties, especially when SEC is much more insistent on the fact that they wouldn't want a replay of Men's Gold?
Right, so if SEC has done that work and anticipates that the organization is flouting the regulatory jurisdictions, then why is it just issuing a statement to its potential customers? Why is SEC not taking action if indeed the organization is flouting the regulation that SEC supervises?
So your argument is that there should be some closure of the premises?
Even if there's no closure, I'm saying SEC should do more than issuing just a circular. If SEC believes that indeed the organization is trespassing with any kind of securities trading regulation, it should do more with other parties. The organization is registered, I believe, and it is registered probably with the Registrar General. SEC should be able to engage with them. The organization, if SEC has verified that they are taking deposits or they are taking funds or they are raising capital, then there is more to just saying we are not under SEC. And if SEC just sits and issues a circular and the organization comes to just issue a banter to the circular, then we are going back to the same game we had with Men's Gold. But I'm saying ultimately it will come to bite the government, and SEC should do more than just issuing a circular.
You know, Richmond, we're having this discussion on the back of, you know, some sort of criticism on the part of SEC, because this isn't the first time we're seeing this situation, rightly stated, the banter with Men's Gold for a while. What do you think is the lacuna in this whole, you know, securities industry, especially when the world is evolving? Modes of transactions, financial transactions are mostly evolving. We recently had this discussion on Bitcoin. What do you think is the lacuna when it comes to regulations within these electronic sectors of transactional, you know, activity?
I think the biggest lacuna we are anticipating in terms of regulation is our inability to build a financial services regulatory body, so that we don't have jurisdictions where banking, pensions, insurance, investment all have different regulators, and there is no center in terms of regulation that is able to hold any party that comes within that circle. Now, even with fintechs coming on board, you notice that now fintechs have some regulation from the central bank, and there's going to be a time where digital sales and digital trading like this would have to come somewhere under the financial services platform. Unfortunately, we don't have that now, and almost every one of these regulators is independently doing their thing somewhat. Right. Until we rise and consolidate financial services regulation, it will be difficult to have these authorities talk among themselves, share data, share ideas, and be able to nip organizations that try to play with regulation in this space in the bud.
Well, away from SEC issues, we want to turn to one of our top stories tonight. Staff of the Coca-Cola Bottling Company Limited in Ghana embarked on a protest at the premises of the company over the alleged dismissal of their colleagues. They say management did not follow due process in laying off their colleagues. Now, last year, if you remember, management of Coca-Cola served notice of its intention to lay off workers due to challenges worsened by the COVID-19 pandemic. The General Secretary of the Industrial and Commercial Workers Union, Coca, was there to solidarize with the workers. He joins me via Zoom to discuss this further. Thanks for your time tonight, sir. What triggered the latest protests? Mr. Cote, I would love for you to unmute. We cannot hear you. Okay, we are still having issues hearing Mr. Cote. They will try and resolve that and get an update on the situation with the Coca-Cola workers. Is it getting any better, or do we move on? Okay, let's turn to the cedi, which has lost 0.25% in value to the dollar with just 11 days into the year. Usually, the local currency goes through immense pressure in the first quarter of every year. Though last year was an exception, the central bank has allotted almost $50 million per auction every 2 weeks to boost liquidity, according to its auction calendar for Forex forward auction. This means a total of $300 million will be sold to banks and other businesses for onward transactions in the first quarter of this year. I'm told we can go back to Solomon Cote, who is the General Secretary of ICU, on the situation with Coca-Cola workers. So my question was, what was the trigger for today's protests?
Well, there had been some disturbance last week where the ICU reported to the Labour Commission that the management of Coca-Cola have done lockout, which we think they have not followed due process. The Commission then writes and orders that the status quo should be retained and all should cease any form of action, so we should go back. The workers then report to work this morning and they were refused entry. And other colleagues also joined them to say, if you do not allow the 30 people who are earmarked on the redundancy to enter, then we too will not enter. In the process of it, the National Union was notified and then we were asked to replace. Fortunately, in the presence of the police, we were able to get back to management, and both parties have agreed that we should all restrain ourselves until the 13th of January 2021. We go to the Labour Commission for further adjudication on the matter. Okay,
so we are told that with the latest dismissal, we are talking about 30 workers. If you can confirm that for me. And I know that Coca-Cola has been doing this for a while. How many workers so far have been laid off? And I'm hearing from some of them who say benefits that were due them or that are due them have not been paid.
No, the issue is that from the beginning of 2020, management said they wanted to lay off 90 workers. But thankfully, the law requires that if you show the numbers, you must give reasons why you want to get it done. And those reasons must be acceptable by both parties. Fortunately, getting to October, they came down to say they are reducing from 90 to 30. This we oblige because redundancy is a right of the employer under the law. Now, we've gone through due process. We are just about concluding where minutes of various meetings held on this particular subject have not been previewed and signed, and then MOU that to put the seal on the entire redundancy have also not been signed, but to a large extent we reached agreement. Then on the 31st of December, management went ahead and issued the termination letters. And strangely, for the first time in the history of termination letter, an employer writes to tell the employee that I know I have not concluded discussion on the subject and I have not also signed any MOU, but your termination is taking immediate effect. So to us as a national union, this is strange. We have never met it, and we want to also have the commission to help us to see that in the ambit of the law, this is rightful or wrongful. So with all the approach from the national union to say, if we can clear those numbers, you don't have issues, and look at the limited number that we have issues. Management say we didn't bad. So this is where we find ourselves as of today, hoping that tomorrow there will be no agitation at the workplace, because we've advised the workers accordingly that once the matter is before the commission, we should all cease any agitation and ensure that the commission takes charge of the matter.
Thank you so much, sir. We'll see how discussions go in the future and hopefully speak with you hopefully we'll have some good news. That was Solomon Coca. He is the General Secretary of the ICU. Yes, let's do a quick take as we head out of Business Live tonight. We'll be back hopefully with some more tomorrow.